Hey guys, Lee Bratcher, President of Texas Blockchain Council. Today we are going to talk a little bit about the oldest asset class in the world. That is real estate. We'll broaden it a little bit to talk about private equity assets in general and the intersection of blockchain and those assets. So if you think about blockchain as a distributed digital ledger, one that is keeping a record of who owns what, you think back to the invention of double entry accounting from the 15th century. Franciscan friar named Luca Pacioli invents double entry accounting, and we've been using it for the past 500 years. That is a record-keeping system, and blockchain is the next iteration of that ledger. So when we think about real estate, it's a traditionally illiquid asset class. It's illiquid, there's not a lot of price discovery, and so it's traditionally had a greater illiquidity discount applied to it. It is not trading at what it could be trading if it was as liquid as a public equity, like a stock that's traded on NASDAQ, say. So in comes a couple different things. You have an alternative trading system. Those have been around for a while. Those are regulated exchanges that you can trade securities on. So they're SEC regulated. Now you also have the invention of blockchain and digital scarcity. And so the ability to manage tokens that represent ownership in a physical asset or a digital asset for that matter. But if it is ownership in a physical asset like real estate, you're really just having an ownership right in the LLC that owns that asset, right? Because they're in a commercial context, you're going to have multiple LPs and investors. And so you have to manage that cap table. And a way to do that is an improvement on a current system is to do that through tokenization and through an alternative trading system where there is secondary market liquidity for those investors. So in this video, I just wanted to scratch the surface, talk about a few of those things and broaden perspectives around what is possible with blockchain as it relates to real assets and real estate in particular and private equity as a whole. So private equity also suffers from lack of price discovery, illiquidity, lack of visibility from potential investors because it is not on a public market. And so these are things that I think you'll see in the coming years become increasingly common. And so you can today purchase a piece of real estate that is in a tokenized form. In fact, I've done that a couple years ago. I purchased a piece of the St. Regis Hotel in Aspen, Colorado in a tokenized form. So if you want more information about this, there's several companies at the Texas Blockchain Council that are working on these concepts, and we'd be happy to make the introduction.